Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. And you're watching Indian Open, and I'm Niraj Shah. Good morning, Niraj.
Good morning, Niraj. Good morning, everybody. Monday morning, these are the headlines. Brent crude prices crossed the $60 mark for the first time since July 2015. IDFC Securities says muted gas prices in India will continue to weigh on ONGC as the upstream major fails to impress in the second quarter. Brokerages turned bullish on ICICI Bank after the country's second largest private lender says that asset quality has remained stable in the second quarter. Lupin, HDFC, Tata Steel and Bharti Infratel are some of the big earnings of the day.
Well, and you could well have spoken about Amazon and Microsoft and a bunch of others because that was really the talking point in the global trade in Friday's session for sure. But quick check of what the global markets did, the handover that we received, and what are we likely to do in today's session. So the handover was pretty okay. Most importantly, NASDAQ up 2.2%, led predominantly by what happened across the tech space, naturally so. But Amazon up about 10% or 11% if I'm not wrong. Microsoft gaining 6%, Facebook gaining. And well, that led to Jeff Bezos becoming the richest man on the planet. And that's something for a company, whatever number of years old, 14, 15, 16 as the case may be, toppling some of the heavyweights of the last few decades. That's the interesting one. I think Facebook also, Mark Zuckerberg becoming the fifth richest Indian and fifth richest person in the world. And he apparently has added about $25 billion in this year, second only to Jeff Bezos, who added about $28 billion. So it's been an interesting day of trade in Friday's session. And the handover on our markets, or the Asian markets by and large, it's a mixed bag. No big moves, I think. Across, Nikkei is down about 0.25%, but the SGX Nifty is indicating a bit of an upside as well. So it's a mixed bag of trade that we'll have. I think more importantly for our markets, while we'll start off slightly higher in line with global markets, it'll be important to see what some of the specific indices do. Nifty IT could well have a volatile week, considering that the Infi buyback determination date ends sometime later this week. So Nifty IT could well have a volatile week in trade. The results haven't been that great. And the PSU Bank's bull trade has been very, very disappointing. I personally thought as well that there could be more in store. Somehow, Thursday's and Friday's trade has shown that there is a bit of a pullback there. And if that continues to drag lower, it may well have a bit of a bearing on the Bank Nifty and thereby the Nifty as well. So what to watch in today's session? A bunch of stocks. ICICI Bank, you could argue good results, but the ADR after starting off 3.5% higher closed very, very flat. So we'll probably have a flattish day of trade for ICICI Bank. The interesting one is ONGC, a stock in a strong uptrend, but the quarter has been weak. The PAT was up due to higher other income. Let's wait and watch if there is a bit of a negative reaction to this one. The stock is in such a strong uptrend that you never know if this would be bought into as well, because what's happened in the quarter may not be reflective of what happens for the rest of the year. I've chosen one small cap stock amongst many, that is Ramkrishna Forgings, and a bunch of others which have come out with good numbers. But HOEC I thought stood out in terms of numbers. Their EBITDA up 5x. On account of higher depreciation, the PAT didn't show as strong an uptick, but about a 90% uptick in PAT as well. So Hindustan Oil Exploration could be very, very excited. Any which is oil exploration companies could be excited because of what's happening to crude. So do watch out for this one as well. And last couple of names. One is that the whole auto component story and the reiteration in all the dailies yesterday that you will have these safety systems, enhanced safety measures reiterated by the government. So watch out for Precall, Rani Holdings, Minda, Multibase. A bunch of these companies could be excited today. And well, more on IDFC and Shriram as well. We'll probably talk about it a bit later on in the show, but the Economic Times is reporting that they're set to call off the merger talks. Let's see if Shriram City and Shriram Transport could be excited in the session today. So a bunch of stocks. We'll watch all of these on Market Open.
I think it's becoming fairly clear that the IDFC Shriram deal, bunch of reports. Economic Times today, Mint has reported as well. And I think a lot of people will say we're not surprised.
You think so too? You wouldn't surprise?
I think a lot of people, when the deal was announced, said it's way too complex regulatorily and structurally to actually fructify. So we'll see what they finally say. But they may come out and perhaps say that they're not extending their exclusivity period. That's the news coming in this morning from the newspapers. On First Word today, again, all about earnings actually. So we'll take a look at Nifty earnings so far and see how the trends have shaped up. We'll take a look at the consumer space as well. There actually earnings have been positive. What's driving driving that? That's a discussion coming up here on First Word. ICICI Bank's asset quality was stable in the second quarter, but there is that big unknown about the divergence, which will probably come through in Q3, may remain a weight on the bank. And finally, Bharti Infratel set to kick off earnings for the telecom sector as a whole. We look at what could be weighing on the numbers.
Okay. But let's first start with the big story. Halfway through the earnings season, and we at BloombergQuint take a look at how the second quarter is panned out so far. Naturally, we're not looking at the whole set of stocks, but talking more about the heavyweights and how they have done. What's the scorecard there? Darshan, more green than red, at least that's the memory that I have from the earnings heat map links that we've been doing every morning.
See, that's right, because what we're seeing at this point of time is that it's been more of an inline set of earnings this time around compared to what we've seen. So if you see what's happened exactly, out of the 23 companies that have come out with numbers, out of which 14 have come with inline set of numbers. So pretty much 23 have come out, 5 strong, 14 inline and 4 weak. So it's been very, very muted. Most of the companies have actually managed to meet their estimates. Now, there are 3 new companies, Bajaj Finance, HPCL and UPL, that have come in the Nifty, and we have included their numbers also. Now, let's see how they have panned out compared to what it was. Now, the strong numbers have actually come off significantly. From 11, they've come down all the way to 9 or 3. These are the weak. These are the inline set of numbers. Inline set of numbers have risen significantly, and the weak set of numbers, they have actually also come off significantly. So, more of what you see is an inline set of numbers. So if you see inline numbers, 9 straight to 14, and that's about it. The number of strong numbers have come down significantly. Bajaj Auto, Maruti from the auto space, Cement did well, Indiabulls Housing and Z did well. Weak also you had Yes Bank and Axis Bank, and that was mainly on account of asset quality, IOC and ONGC, but rest across the board you could see weeks. We could see an inline set of numbers. Now individually, let's break it down in terms of what's happening. In terms of auto, Bajaj Auto and Maruti were the 2 numbers that came out. Margin expansion was seen and strong growth was seen. So these are the only 2 Nifty companies in the auto space which have reported numbers. They were decent as the strong growth came in. Cement, Ultratech and Ambuja came out. Ultratech and ACC outperformed the peer Ambuja at this point of time, but ACC is no longer in the Nifty this time around, and it's the 4th straight quarter of strong results by Ultratech. Consumer discretionary, ITC, Asian Paints as well as HUL, all of them reported an inline set of numbers, so no surprises coming in from there. Let's talk about oil. So finally, after 2 straight quarters of very strong growth, Reliance has come out with a muted set of numbers. The financials was muted. The EBIT turning positive for Jio, that was the big positive that came out. IOC weak set of numbers that came out, and a second quarter of weak numbers by ONGC. So that's the picture as far as the energy companies are concerned. All the private sector banks met estimates. So Kotak, HDFC, IndusInd, ICICI, all of them met estimates. The 2 weak numbers that were there this time around was Axis Bank reported weak set of numbers. The asset quality issues were also there. And Yes Bank, the numbers were strong. The financials were strong, but asset quality woes was there as far as Yes Bank was concerned. NBFCs, Bajaj Finance was the only NBFC that came out with number, and Bajaj Finance came out with an inline set of numbers. Strong numbers from Indiabulls Housing Finance this time around. Finally, the IT, all 4, the big 4, all of them have come out with numbers. All of them have reported an inline set of numbers, but the guidance that they have said is the weakness that has been seen in all the 4 companies, that was a bit of a concern as per the 4 numbers that came out. The only company in the media space listed is Z Entertainment, that came out with numbers. Strong set of numbers. Ad growth revival was clearly seen. So if you see the numbers, Niraj, this time around, pretty strong set of numbers. So it's been an inline set of earnings. There are no surprises. Couple of them are strong, but if you compare it for the past few quarters, it's after a long time that you're seeing that majority of the numbers are pretty much in inline category.
Yeah, more green and probably yellow as well. If you can just have the heat map on the screen, more green, fair bit of yellow, but banks and oil and gas, maybe ONGC and IOC leading to this. I think Darshan summed it up really well. Tech, save for TCS, the commentary was very weak. But the surprise one, Ida, that I thought was that, maybe not a surprise to you, or maybe not a surprise to a few people, but Yes and Axis. And clearly, it was not as much maybe about the numbers as much about the divergence that they pointed out.
Both numbers and divergence.
Numbers both as well.
Yeah. I think the surprise was actually in the consumer earnings, which you're going to talk about, because strength in consumer, particularly non-durables consumer, is important to note from an economic perspective as well.
Yeah. So since you brought it up, I mean, I just divided into staples and discretionary just for the ease, and obviously we haven't gone down to each and every company, but I've tried to choose the 4 or 5 key names that I thought really deserved a mention on the consumption side. And staples, which is largely FMCG, is largely in line with a few exceptions. That's the key with regards to the staples. In terms of discretionary, by and large, you could argue that it's better than estimates, at least amongst the large ones. So let's try and tell you all about these numbers. So firstly, starting off with the staples, and HUL. So EBITDA margins, 20.2%. If you look at what they did in the corresponding quarter last year, you would probably be disappointed. But hey, it's against the estimate of 19.2%. So you would argue that margin front better than expected. Volumes at about 4% versus an estimate of 3 to 5%. So volumes are largely in line, but price hikes in certain categories gave them extra impetus. So this was the story of HUL, predominantly that the margins slightly better than what we were working with, and the volume picture satisfactory. ITC, I've not taken the cigarettes business out here. We're trying to essentially look at apples to apples. So in ITC's case, while it was a largely inline quarter, the FMCG business actually did really well. A standout, and this might be interesting, it was a positive EBIT in quarter 2 for the first time ever. No, this is not positive EBIT for the first time ever, positive EBIT in quarter 2 for the first time ever. Personal care showed strong growth led by Dios as well as Vivel, and branded packaged food posted healthy growth in revenue. So ITC, it was all about the FMCG business, frankly, if you ask me. As I said, quarter 2 was the strongest that they've had in a really long time on the EBIT front. Emami, profits ahead of street estimates, and the volume growth at 7.4% was a standout, quite frankly. They also had a margin boost because softer ad spends, price hikes, lower tax rate, all of that boosted margins as well as profit for Emami. And there was a couple of small names, Agrotech, in volumes disappointed, margins improved, but in Bajaj Corp, volumes recovered, reported OPMs were down. So the smaller ones, you can't really argue too much, but net, staples in line. Discretionary is the really interesting one. So Asian Paints, an inline quarter, but the management commentary, I read a bunch of reports, they were the most cautious that they have been according to analysts in a really, really long time. So that's the interesting one. But the two names, Vida, from the discretionary space, one of them United Spirits, and I don't need to speak too much, the market gave its verdict, but in Friday's session, above estimate results, multiple efforts to improve margins. And I think one, that the con call, they were very, very bullish. They cited improved volumes and price hikes in coming months, and they believe, the management believe that in the PNA, the prestige and above segment, which I believe is the slightly higher end segment, their market share is improving, and which is why that stock did what it did in Friday's session. And Jubilant Foodworks, the same store sales growth, because of a bunch of activities that they are doing, as well as the margins soaring, really led to that stock to not doing all that badly. So inline revenue performance, but EBITDA margins soared. The only problem with a bunch of these discretionaries is the valuations. At FY19 PE, Asian Paints consensus 48 times, United Spirits consensus 46 times, current market price, Jubilant 47 times. I mean,
that apart, but I think, and I know they're all very different businesses, but the fact that there were no negative volume surprises is important, right? I mean, HUL, despite commentary that had been coming in from Unilever during the quarter saying that volumes in India have not recovered to pre-demonetization, pre-GST levels, but the volume growth numbers that they reported were decent.
Yeah, maybe that's the common thread.
Yeah.
I don't think, aside of Asian Paints commentary on the future, almost anybody in the reporting stage or in the commentary ahead really spoke about any dangers with regards to volumes. So yeah, that was the standout. But let's see if this is for at least the staples, whether it's a case of restocking.
Yeah, it could very well be that.
Or whether there is some sales that we'll get to know in the October, November, December quarter.
Absolutely. One more quarter and then you'll probably get a clearer sense. On the banking side, ICICI Bank reported numbers late Friday. They reported after market hours, which is why we're taking stock of them here. The headline numbers are now fairly well understood. Asset quality was largely stable on a quarter-on-quarter basis, although that big sort of brouhaha about divergence still over their heads because they haven't gotten their divergence numbers from the RBI. So those will come through probably in the third quarter or somewhere in the middle of the quarter. Shraddha standing by with key takeaways and what brokerages are saying on ICICI. Shraddha.
Well, just to sum up the numbers in 7 points, one, net profit missed estimates is fell by about 33%. The fact that it had lower capital gains in this quarter than the base quarter was also another factor which played a role as far as the net profit degrowth is concerned. Advances growth improved slightly to 6.3%, while CASA accretion continued. It rose by another 50 basis points on a sequential basis. There was also about 410 basis points improvement as far as the provision coverage ratio is concerned, which the analysts are looking at positively. When it comes to the headline numbers, like you said, there has been a marginal improvement in gross NPAs from 7.99% to 7.87%. In fact, the bank management also said that the slippages would come in at a lower level in the third quarter. The watch list numbers that we always talk about for ICICI Bank also saw marginal improvement of about 3 to 4% on a sequential basis. Now, what happened with respect to all the IBC linked accounts? Well, first, with respect to the first list of the RBI, they have provided all the 651 crores that they needed to provide. On the second list, they have an exposure of about 10,500 crores. But the good news here is that they have said that 98.7% of this has already been recognized as NPLs, but the provision coverage on these accounts remains only 31%, so they will need to make some slightly higher provisioning there. And as far as divergence is concerned, they are still awaiting the RBI final report, so nothing on divergence over there. So having said that, the street is probably likely to focus on the asset quality improvement because there was no bad news, at least this time around, for ICICI Bank. The ADRs did close flat, so we'll have to see how the stock does today.
Okay, many thanks for that. So flattish trade for ICICI expected, but Ira, so we were waiting for three numbers. Axis, yes, both disappointing. ICICI, I remember a conversation that we were having as well. They've kind of tried to steer clear of being a part of this triangle last maybe couple of quarters.
Yeah, we'll wait for the divergence numbers, but I actually think that they have cleaned up ahead of some of their other peers, including Axis and Yes Bank. The fact that what Shraddha was saying, that even in the second list of the IBC accounts, their exposure is mostly already NPA, shows that they've been conservative. They've put those accounts, the trouble accounts, into NPA. Yes, they need to provision more, but capital is not a problem for ICICI Bank. They can increase provisions as and when they want. So that's not an issue. Slippages, as she was saying as well, not largely not very much out of line. So I think ICICI is, I think, I was faulted for saying that their asset quality is stable. It's certainly, not desirable at desirable levels, but on a quarter-on-quarter basis, it's, relatively better than the Axis's and the Yes Banks of the world. So I think they were okay.
Yeah, well, let's see. The market has given the verdict as well. The ADR, for a manner of speaking, started off in the green, then closed flat as well. But I think, Shraddha, if you're still there, a quick summary of what brokerages have said about the results.
Well, brokerages are largely positive, and in fact, many of them have also hiked their target prices, not too much, but about 5 to 9%. On the back of two common takeaways that I read on all the brokerage notes. One is that the management alluded confidence on asset quality in their con call, and secondly, analysts don't expect significant divergence from outside of the watch list expectations. So two key reasons for those price hikes coming in. Kotak Securities has maintained a buy, hiked the target price to 385. They've said that the impairment trends are definitely high, but the fact that they're getting more predictable is positive. And while they did say that the audit review by RBI could remain an area of concern, they're not too perturbed because they believe that the NPLs from outside the list have now already been recognized. They've said that the bank can re-rate from the current levels because there is also good momentum as far as the asset quality resolution is concerned post the bank recapitalization news. You have UBS, which has maintained a buy, hike the target price to 400. They've said that the management tone was positive after a long time. They have also said that the current valuations fully factor in the bad loan risks, while the retail franchise of the bank is underappreciated. You have Nomura, which has retained a buy and retained their target price at 355, especially because they believe that bulky stress is out of the way, and that they sense that recognition of large stress beyond watch list is now nearing an end. IDFC Securities has maintained outperform and raised the target price to 345. Again, they have said that some lumpy accounts already on the watch list may not form a part of divergence. The management, they say, hadn't been positive or confident on the the asset quality to this extent in the last 2 to 3 years, and they've also marginally upgraded the multiple that the bank is trading at on account of the core business and also reflecting the increased value of their subsidiaries. So broadly, positive tone, at least as far as the analysts are concerned.
All right, Shraddha, thanks so much. That's enough on ICICI. Let's switch focus to the telecom sector. Earnings will start to roll in. We've got Somit standing by with what we should anticipate. Somit.
So the second quarter for the telecom companies is expected to be weak, not only because of the seasonality impact, but also because of higher tax rate under GST and Jio's continued competitive pricing. Now, under GST, the tax rate was fixed at around 18% versus the earlier 15% rate under service tax. And service providers in this quarter could not pass through this hike in tax rate because of the competitive intensity that Jio had brought in. Now, in the second quarter, the two telecom service providers, that is Airtel and Idea, will yet again see their average revenue per user decline for the fifth straight quarter. Now, Airtel's ARPU is expected to come in at 146, while that of Idea at 135. Now, company-wise, if you see, Bharat Airtel, that is the biggest telecom company, will see its consolidated net profit decline by 8% compared to the last quarter. But its African business will see a gradual recovery with growth in top line and margin expansion due to cost control measures that the companies are doing. Now, Idea Cellular, on the other hand, will see its financials worsen in the second quarter. EBITDA is expected to decline by more than 20% to 1,484 crore in the second quarter, while its loss will be more than 1,000 crore in this quarter. And this could be the fourth consecutive quarter where the company will be posting a net loss. Now, Bharti Infratel, that is the tower infrastructure company, on the other hand, will see growth. Its top line is expected to grow by 10%, EBITDA by 12%, as it will benefit from improvement in energy spreads.
Okay, Sumit, stay on because you might want to have some questions as well with the ONGC management. I'm told Mr. A.K. Srinivasan joins us right now to speak about the quarter gone by and the outlook ahead. Good having you, sir. Thanks so much for joining in. Would you say that there were one-off factors at play? Because clearly the numbers have been slightly lower than what the street was working with.
Definitely, there has been some extra expenditures which people may not have expected to have it, due to which the numbers may not be in line with what the market would have been expecting. But as far as our performance was concerned, we have done fairly well in comparison to our last year Q2 levels, and it has been good.
Samit, I think you have a couple of questions. Start off.
During the quarter, the crude oil averaged around $52-53 per barrel, but then your realizations were down to 51.22. What were the reasons for the same?
No, basically the crude prices are benchmarked with the gross GPW, and based on which the prices are readjusted. So if the Brent is moving at 53, but it has to get aligned with the GPW, and based on which the prices get adjusted across.
Your gas production was, however, higher by 4%. And do you see the same growth in production for gas in the coming quarters because the gas prices have been hiked?
No, it is not related to, because my production is already put in stream and it doesn't relate to shutting down of wells and all. It continues producing. And accordingly, the price, if it is moving up, the revenues will better off. However, during our 2.48 price regime also, we were producing the volumes. So it has nothing to do with the price limitations.
Are you increasing your production estimates for the second half of financial year 2018?
Pardon me? Which one?
Are you increasing your production estimates for gas in the second half of financial year 2018?
No, already we have set targets which are higher than our last year for our gas production, and we'll be achieving those targets.
Okay. Also, the other income was higher. Was it because of the dividends that it came in from the subsidiaries, or were there any other reasons on the same?
No, these are primarily the dividend income was higher in our current quarter, and due to which other income was higher than previous periods.
Mr. Srinivasan, just last couple of questions. Firstly, does this quarter in any way change the trajectory that ONGC seemed to be on for FY18? Because almost everybody's on the street. There's not a single analyst on the street which is bearish. Most people are anticipating gas price hikes in the second half as well. Does this quarter change that trajectory at all, sir?
Definitely the prices increase for the next quarter. It has moved from 2.48 to 2.89 now. So that is, plus the volumes are increasing. So definitely it should look good in the coming quarter.
Concerned that the revenue growth could be in the second half, each quarter split would be much better than what you've done in the second quarter itself?
Because the crude prices are looking upwards in the current quarter, October. And that should really, and if these prices remain more or less at this range, we should be definitely doing a little bit better.
One last question, sir. I don't know if you can comment on it or no, but almost everybody is waiting for some clarity on HPCL. You would have anticipated this question. I don't know if you can answer that or no, but any clarity that you can provide us?
See, this process is on, and the deal needs to get concluded before 31st of March. And definitely before that, we would like to close it. But as of now, we are still in the process of evaluating the issue.
The street was working with December, sir. You presume it will probably get extended beyond December? The announcement?
No, I will not be able to make that statement because today we are just completing October and we have still time to... But it all depends on how the due diligence process gets concluded.
Fair call. Mr. Srinivasan, appreciate you taking the time out and speaking to us on BloombergQuint. Thanks for taking the time out. Well, that's ONGC speaking about the quarter. I think the sum and substance, I don't know, Sumit, that came out to me was that this quarter will not necessarily change the trajectory for what ONGC set out for the FY18 as a whole.
Exactly. That was the main takeaway that came in. And also, they're expecting growth in the second half of financial year 2018. That's what he said.
Okay, growth in the second half as well. I think they've spoken enough about the gas prices as well and whether they'll rise or not. I think I thought the conversation that came out was that it should be better for the second half. Sumit, thanks a lot for joining us and being a part of this conversation as well. But I think that's all that we have on First Word today at least. But stay tuned to BloombergQuint as we talk about markets and domestic liquidity with Rajeev Thakkar of Parak Parekh Financial Advisory Services. Is there a shortfall in coal in the country or is it just an inventory management? We asked Gopal Singh of Coal India. And HOEC posted a 5x jump in EBITDA, a 90% jump in profit. We talked to Managing Director P Elango. Okay, now full tilt towards the day's trade. The derivative space, firstly, second day of the new series. Agam Vakil standing by with the FNO setup. Agam, good morning.
Good morning, Niraj. Well, we did see the Nifty hold on to the mark of 10,300, but there was a little bit of weakness. So in terms of how we've seen the November futures pan out, we've about a near 3% increase towards open interest. On the other hand, when it comes to the Nifty Bank, we have seen a little bit of unwinding. In fact, the open interest has fallen by a little less than 1%, even when the index itself moved down by as much as 0.7%. But it's the India Volatility Index. While we did see a lot of movements on an intraday basis on the Nifty, the WIX declined by as much as 1.2% here, as you can see here, below the mark of 11.5. That said, we have also seen a decline in the Nifty put call ratio, which now comes down to around 1.37. But in terms of changes in open interest when it comes to a lot of these Nifty options, as you can see here, we have seen a lot of activity in the 10,300 put and a lot more writing in the 10,700 call, surprisingly. But we are keeping an eye on JSW Energy, which has moved into the FNO band. So that said, we are also looking at a lot of fresh longs building up in V-Guard, where open interest has surged by as much as 60%, followed by Ajanta Pharma, which has also picked up a little with an increase of as much as nearly 27% in open interest towards fresh longs. So a lot of these mid caps will be in focus, along with the benchmark, of course, as we move into today's day of trade.
Okay, Agam, many thanks for giving us that lowdown. Let's get in Abhijit Pathak, Director at Definite Solutions, who joins us on the show to talk about his thoughts on the FNO setup this morning and what are the trades that he would be recommending. Abhijit, good morning. Thanks much for joining in. Let's first start off with what do you think the index could do? We'll start off marginally higher. Maybe the PSU banks won't participate. How would you look at trading the key indices?
Like I said on Friday, Nifty has a resistance near 10,400, 10,420. So I doubt whether that will be crossed in a hurry, because the resistance also comes from 10,400. The PCR at 10,400, which is quite weak. It is not even more than 0.3, which means the calls which have been written at 10,400 are thrice the number of the puts which have been written, which is a bit bearish. At the same time, even the PCR at 10,300 is not extremely bullish. So I would expect a pullback in at least in Nifty, if it cannot cross 10,400, 420 this week.
So, and what would your take be on the Bank Nifty, Abhijit, and I also want to couple that up with State Bank of India. How is that looking? Because after that initial, hurrah, even SBI, I would understand some of the others coming off, but even SBI has come off. Have you looked at the trading positions there?
Yeah, if I see the long-term charts, it is something quite surprising because I saw PNB, I saw State Bank, I saw ICICI Bank. Most of these banks have hit the tops which have been created a few years back. In fact, I think 2010, 2012, and these are some kind of a double top. So unless these recent highs are crossed, which is 352 in State Bank and 315 in ICICI Bank, they can pull back or go sideways. And in terms of options also, State Bank shows the resistance near 330 and a support near 310. So it might remain sideways for some time.
Might remain sideways. But so you wouldn't initiate any kind of long positions in any of the PSU banks, right, Abhijit?
No, not at all.
Not at all. I think that's an affirmative. The second question that I have, stock specific, is on United Spirits, Abhijit. Quickly, what do you expect that one to do after the big surge in Friday's trade?
Yes, there was a big surge, and that was the first day of the November settlement. So it's almost like it took a lot of option writers unaware. And there is hardly any support from put writing at 2900, 3000. But at the same time, there is resistance near 3200 as per the chart. So if 3200 is not crossed, it can pull back to 2900, and that should act as a support. So again, I feel it might be sideways between 2900 and 3100.
Okay. And what about specific stocks? Abhijit, what are you recommending today?
I would recommend a short in Reliance Industries near 945, 950, or if someone is not interested in futures, he can buy a 920 put near 15, 17 with a stop loss of 10. And that put can go to 22 or even 30. And Reliance, I expect 920 in the very near future.
Okay. 920. Abhijit Pathak is giving a sell call on Reliance Industries. That's interesting, though. I think these oil and gas stocks have started weakening a little bit in the last couple of days. Selectively, I might add. Abhijit, thanks a lot for joining us today and giving us that perspective. Good calls on the Sun Twins, Abhijit. They did really well in Friday's trade as too. But speaking of oil and gas, I think if there's one commodity that is standing out, that is crude. Or does Pradeep think so as well? He joins in, of course, with a quick check on the commodity space and to take the show forward. Pradeep, good morning. Crude clearly standing out?
Definitely, because Brent is around 60, above 60 rather, and WTI is around $54. So these are new highs if you look at it for both these measures. And crude has in fact moved up because of the talks of production cut. The cuts are likely to be extended by another 9 months. That is till December 2018 from the current limit of March 2018 that was agreed upon in last meeting. And Saudi Arabia, Russia and many other key players are actually more or less on board. So market is trying to factor in this, and that's why we have seen both Brent and WTI moving up. Well, Azleen Ahmed, the editor crude oil markets at Argus Media, joins us on the phone now. Azleen, how do you read this? How much more upside do you see in crude really on the back of these likely extension in production cut?
Probably not that much higher because right now they still haven't, OPEC still hasn't made a final decision. The official decision will only be made at the meeting next month. But I guess Saudi Arabia, the Crown Prince and Russia has made all the right noises. They have said that they do support an extension of the production cut agreement. So although I think that we still have to wait and see what they finally decide, but right now the market seems to already be factoring in the expectations that there will be an extension beyond the March 2018 expiry. So that's probably a big factor that pushed Brent and WTI prices up last week. Basically, I think it's going to be quite tough for the prices to go another $2-3 higher because assuming nothing else happens in terms of supply outlook for the next couple of months.
the key factor that most crude experts have been pointing at while, forecasting a kind of ceiling for crude in near to mid-term was the supply of US crude oil. In fact, India also received a consignment recently. What's the outlook there? How do you see the ramp up in the US shale production, and to what extent will that limit the rise in crude prices?
Oh, that will be the big factor that will curb. We think that that's going to be the big factor that will curb further increases in oil prices, because already at the current prices, it's probably quite encouraging for the U.S. producers to increase their output. We have seen that the rig count has fallen for the last 4 weeks, but I think we must also remember that the rigs have greater efficiency, so they may not need big increases in rig count to increase the actual production. And the last EIA weekly data put U.S. crude production at, I think it was 95.5 million barrels per day, which is not decreasing. So I think that if oil prices stay where they are, there will probably be more incentive for the U.S. producers to continue to raise production, and that could keep a lid on the gains over the next few months.
Okay, Asleen, thanks a lot for all these details. So Asleen doesn't really think that there is significant upside here on as far as crude
That's good
is
news,
concerned.
because Uday Kotak has just tweeted that crude staying above 60 means that India has very little fiscal space. The flashes were there on your screen. But that's Uday Kotak saying that crude above 60 is not great news. I mean, we know that we are. It's now watchbearers of the Indian economy coming out and saying that this is probably that one big concern. So I'm glad we addressed that. The other sorry, Pradeep, anything else on crude?
Well, actually, gold is something that we'll be eyeing on because, in spite of the political uncertainty in Catalonia, there is not much reaction because we are focusing on actually dollar index, and that is near 95. But, expectations are that it will probably give up some of the gains because Wednesday's meeting is unlikely to be of any consequence because most likely a rate hike will come only in December. So this meeting, once it's over, and also depending upon who is actually picked up for the top job, the chances are that Jerome Powell is going to be Trump's favorite. And if that is the case, because he is seen as a dove relative to Taylor, who actually kind of came out with the Taylor's rule. Sure. So if that happens, most likely dollar will correct, and that would be a good news for rupee, good news for maybe gold as well.
Well, let's wait and watch. By the way, just a brief mention before we move on to dissecting what's happened in the quarter. Bharti Telecom, the flashes were there on your screen just a while back. Bharti Telecom and promoter will hike stake by 4.62% in Bharti Airtel, and the promoter holding will go up from 67.14 to 71.76. Now, this is very, very interesting. Typically, promoters hiking stake, even by a small quantity, in a small company too, tends to be positive. Now we have the promoter entity of Bharti Airtel coming out and saying that, hey, I'm just presuming all of this, but hey, we are so confident and so bullish about the business, we are going out and hiking stake. 71.76 versus 67.14. That's about 4.6% of a hike. That should, I believe, have some bit of a trigger for Bharti Airtel today. Not that it needs triggers, frankly. The last 1 month, it's been one big mover. But let's wait and watch if indeed this triggers some further upsides. It's had a last 3 or 4 days of a pullback. Let's see if this announcement kinds of arrests that. But let's also see if what's happened, what stayed true for the quarter is true for what's happened over the weekend as well. Numbers that have come out post market hours. Darshan is here with the earnings heat map, but no, not quite really. More red than green. Darshan?
Yeah, not the best, and some of these are large companies like, ONGC or a Jubilant Life, Adani Transmission. So these are the large companies that have come out with a weak set of numbers. Now we'll take a few of them. Let's talk about some of the companies that came out with strong numbers. Tata Metallics for one was rather strong. If you're looking at the revenue growth of almost 40%, profits grew almost 50%. If you're looking at the EBITDA, that was another up 50%, margin improvement by almost 100 basis points. And we've seen the case with metal stocks, the earnings trajectory has been rather strong. So a thumbs up for Tata Metallics. The next one is HOEC. Very strong numbers. If you look at a Q-on-Q basis, 126% growth as far as top line is concerned. Profit grew from 3 crores to almost 6 crores. If you're looking at the margins coming in and from 38% to almost 86%, the oil business seems to be doing well. Crude is doing well. So all of them playing in favor of HOEC should be in focus. RK Forgings, again, strong set of numbers, 1400 over 100% top line growth, bottom line growth. It came from a loss of 5 crores to a profit of almost 23 crores. Margin expansion was seen from 18% to 19.5%. So strong set of numbers both on the domestic front as well as export front for RK Forgings. What didn't do well? Jubilant Life. Poor set of numbers. Even though revenues were up 20%, profit fell in 13%. The EBITDA margin was much lower. The EBITDA came in at almost 306 crores. And for the past so many years, since the management is saying, the EBITDA has not been able to move up. So that's the big problem that's coming in. Margins at sub 20%. Even a one-off was there. So numbers not at all the best. Brokerage is giving this the thumbs down. Bharat Industries was one of the outperformers over the past few quarters, but this time weak set of numbers. 4% revenue growth, net profit falling by almost 44%, margins declining to almost 22% versus 24%, EBITDA fall by 4%. So weak set of numbers. And finally, Aero Granite came out with a weak set of numbers. Revenues down 20%, profits were down almost 90%, margins at just 6% versus 13%. So more and more we're seeing more red as far as green in the numbers that came out after market hours and on Saturday.
And this is an encore, I think, of what happened in Friday's session. So essentially numbers that came out post market hours on Thursday and how they did in Friday's session as well. Okay, let's wait and watch. Take an initial thought from T.S. Hari joins us right now on the show. ONGC Hari, let's start off with that because the management just spoke to us as well. And while the quarter was a bit tepid, they sounded fairly bullish about the second half.
See, I think the only good thing is that gas prices are going up. I think that's probably the only thing that is working in favor of ONGC. I think the numbers, if you leave out the other income part of it, it's actually quite disappointing. I don't think there is much to write home about the numbers. But in my view, the bigger, what I would say, the overhang at this point of time are two things. One is what happens to HPCL. Because at the end of the day, HPCL is going to be a major investment outflow as far as ONGC is concerned. I think the second is that they have about a $6 to $7 billion of investment plan in the next 4-5 years. Now, how this is going to be funded, what it impacts, how it impacts the financial leverage of the company. I think all these things are major issues as far as the company is concerned. So, yes, probably earnings, it may be up and down, but I think the big investments that are planned, I think that is going to be the big overhang as far as the company is concerned.
Harian, would you like to buy Bharti Airtel if Bharti Telecom, the promoter, is willing to buy nearly 4.5%?
I'm not sure. I know that the whole market is positive, but I still have my concerns on this, entire telecom pricing policy. And let's not forget, I don't think Jio is done with. I think Jio still has a lot of steam. They still have deep pockets. I think they have sunk in 2.5 lakh crores. They could sink another 1 lakh crores. I don't think they have any shortage of funds. And I think till that happens, all the large companies, be it Bharti, be it the Vodafone Idea combined, I think they are going to have real trouble trying to make money out of this business. So I think that is going to be difficult. I think whatever we have seen, the rally we have seen is probably over and done with. And I think it's time to be a little cautious on Bharti now.
Wow, okay. Anything that stood out for you in terms of earnings? I thought Ramakrishna Forgings was excellent. HOEC wasn't doing too bad. I mean, crude doing what it is doing. Maybe all explorers have a field day.
Yeah, but my only worry about HOEC is how much further for crude, because I think at $60 in Miami, if you look at the global mix, I don't see too much of upsides as far as crude is concerned. So HOEC, maybe they may have a good quarter. I think it was 4 times up as far as the profits are concerned. But I think probably the best is done with. I was most impressed with Tata Metallics numbers. And I think one of the many metal companies that are benefiting from the sharp rise in metal prices, demand growing in China. I think Tata Metallics to me seems to be the beginning of another, I would say, string of good performances from here on. So Tata Metallics is one stock that really stood out as far as the results are concerned.
Okay. Well, let's go across to our research team and see which are the stocks that they are keeping an eye on. And let's see what is really the expectation with regard to the results coming up next. To begin with, Darshan, Lupin, I think market is not really expecting great numbers from any of the pharma companies. But what do you expect from Lupin?
See, it will be a weak quarter, no doubt, Pradeep. We are seeing a decline as far as 5% on the top line. We are seeing a 30% decline on the bottom line. Margins at just 21.5% versus some 24% that they have last time around. Now, both they have two businesses, basically their formulation business and the API business. Both of them are expected to see a degrowth in excess of 5%. US will be the big problem here because we are seeing a more than 20% drop or probably a 25% drop in their US business. India will be stable, 22% growth that we are seeing. The other markets also will be rather stable. Now, what has happened is there is significant amount of pricing pressure in the US in 3 of their products, and there is a lot of price control, price issue or price pressure there. So, Glumetza, Fortamet, as well as Minastrine, these are the 3 drugs in which they have competition, and the competition is ramping up significantly. Gavis has not been able to turn around for Lupin, and that will add to the US pressure. India will be strong, given the fact that they come back from a destocking quarter to a restocking quarter post GST. So India is expected to see a 20% growth on the top line as far as India domestic market is concerned. Couple of new launches that they've done in the US market, but that will be offset by the weakness as far as their competition is concerned. And they have significant amount of competition in their high margin products, and that will dent the overall margins of the company. So expect a very muted set of numbers from Lupin this time around.
And Shraddha, HDFC, stable set of numbers?
Absolutely, steady trends expected. So if you look at the key numbers, net interest income is expected to grow by about 6%. Net profit is expected to grow by about 9% to 1990. Interest spreads expected to remain around that 2.3% levels that we have seen for the past many quarters. Same is with loan growth, 13 to 15% is the kind of number that the street is working with. Gross NPAs also have been hovering around that 0.8% mark for HDFC, except for the blip that we had seen in the June quarter owing to an exposure to one of the RBI IBC accounts. So that's a key thing to watch out for if they have any exposure to any of the accounts under the second list. Broadly, we'll also be tracking the loan growth trends, especially in the light of RERA, the movement as far as the spreads are concerned, and asset quality trends on the corporate loan book. But broadly, stable trends expected, Pradeep.
Well, thanks, Shraddha, for these details, and Darshan. Thank you. Hari, if you look at HDFC and HDFC Bank, they're usually steady performers. But let's talk about ICICI Bank. Looks like this asset quality is stabilizing. What's your call there? Would you be a buyer now?
No, not exactly. No, I continue to retain my cautious stance. And if you look at the latest results, I think the gross NPS from 7.91 down to 7.87, I think that could be slightly misleading. I'll tell you why. There are about 18 accounts that still have been classified as potential NPS by RBI. And as of now, I think ICICI has just provided 31% of those total loans. Now, if they provide the balance 70%, hypothetically, that's another 8,000 crores that ICICI will have to provide. Now, I think if you add that up, your NPS are actually 9.3%, not 7.8%. So I think NPS is still an issue. Probably the condition is better than what it was 1 year back, but I think ICICI to me looks to be still some way away from bottoming out as far as the profit, this NPS cycle is concerned.
Okay, that's interesting. But it's 8:46. Hari, stay on. So much more to talk about. It's 8:46. So that time of the show, when we have to get in our technical experts on board with their thoughts on specific stocks. Mukesh Singh of Neela Financial Services and Vishwesh Chauhan of Monarch Network Capital join us on the show. Gentlemen, both of you, thanks much for taking the time out. Let me start with you, Mukesh. One question on the index. What are you expecting the Nifty to do today?
Very good morning, Niraj. In Friday's session, we cover.
I think we'll just have to, Mukesh, just stay on. We'll just have to rejoin that line properly. Vishwesh, can I take an index call with you very quickly? Any thoughts on any strategy on either the Nifty or the Bank Nifty?
Good morning, Niraj. See, I think more or less index is definitely going to trade with an up bias. But at the same time, I think 10,500 is likely to be a very psychological, at the same time data-driven point where the lot of profit booking is likely to emerge. So in the scenario like this, you don't want to take a position which is directly in the index. In fact, directly, by either buy or sell. So what I would like to do is 10,400 call and put. if you add a 10,400 call plus 10,400 put, you get the combined premium of around 266 rupees. So now that gives you a cushion till 10,150, at the same time 10,650. So I think that is a very nice range, and in my opinion, first half of November series we may definitely trade in the range of 10,200, 10,400, and I think downside max till 10,100. So in that scenario, with a theta, that means a 1-day time value of around 5 rupees, I think I would like to go ahead and short the 10,400 straddle in order to get some premium. At the same time, my expectation is that market is likely to trade in the range with the bullish bias.
So a range bound market, that is the call, and therefore you could straddle 10,400 call and 10,400 put. Both contracts can be sold so that you can actually eat into the premium if market really doesn't move significantly up or down from these levels. So Shwesh, you also have some bullish stock calls.
Yeah, Pradeep, I think we have 2 buy calls. On the Friday session particularly, I think pharma stock was witnessing a very smart move, and all of the smart pharma stocks were showing the signs of, adding a significant number of, open interest. At the same time, I think cyclically those stocks are now witnessing, signs of bottoming out. So in the very shorter term, we feel that pharma basket may outperform the, market. And I think in the pharma basket, if one is looking for a trading perspective, then one would like to be with the momentum. So in a very shorter term, Wockhardt Pharma seems to be a best momentum pick with a stop loss of 630. We recommend this, buying for the upside target of 740. And second is a buy on Ingenious India. I think in a very shorter term, the stock is showing a very good sign of a momentum, and again it is witnessing that cyclical bottom in place. So I think with a stop of 175, stock looks good for the target of 200.
Okay, on to our special segment for the day, Bloomberg Edge, where Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up. Today, the terminal has thrown up a pattern on Bajaj Finserv. Jayesh, what's the terminal telling about Bajaj Finserv?
Morning, Niraj. So it's a buy call coming in for Bajaj Finserv based on the outside-inside formation on the Bollinger Bands. Now, first, let's have a look at how the Bollinger Band and the actual pattern works out. The Bollinger Band actually shows you the expected trading range based on volatility, and it also plots 3 lines, which is the moving average. There's an upper band and a lower band that gets plotted. Now, when the bands expand, we are said to be in a trending market, and when the bands actually contract or narrow down, we are said to be in a sideways market. Now, the outside-inside formation that I was talking about, so you have to watch out for 2 conditions. The first candle has to close outside of the trading range or the Bollinger Band, and the immediate next candle has to close within the range. So let's have a look at the chart of Bajaj Finserv that we have. You can see that this particular pattern has played out. The 2 candles, the last 2 candles, they're very thin ones on your screen, but the first one over here, this red candle has closed below the yellow line, and the immediate one has closed above the yellow line, which means that there has been an outside-inside formation on Bajaj Finserv, thereby indicating a buy signal coming in for that.
What about the efficacy of the same, Jayesh?
So Niraj, efficacy is very good. Last time when we did sometime in September, you can see over here, this was the pattern that has got generated, and from here we have reverted back to the moving average, which was a 10% move. The similar case can be seen sometime in June as well, when you had this particular pattern that got formed here, and then again the prices moved on to the white line. But the other interesting bit, Niraj, that I picked up was the analysts that cover the stock and have a buy rating on this particular stock. So this is very interesting. The 12-month target price is about 5,611, which gives it a return potential of more than 10% from current levels as well. The buys, if you look at it, 60% and hold at 40%. Interestingly, there are no sell recommendations for this particular stock.
Thanks, Jayesh, for all these details. Well, Hari, what's your strategy on financials? Are you looking to buy NBFCs on decline, or you prefer PSU banks?
See, I think for now, at least in the immediate future, to me, PSU banks looks to be a good bet. We may have to be a little more selective, Probably stick to the large 3 or 4 which can actually benefit from greater credit, probably an SBI, a BOB, to an extent PNB, Union Bank. I don't think I would go beyond that. Getting too much lower, especially into those stocks with the gross NPS beyond 10%, I think that can be a slightly dicey scenario. But yes, I think the top 3-4 PSU banks to me look to be the good ones. NBFCs, yes, maybe I think they are showing signs of turnaround. We saw the numbers of Bharat Financial. I think there are some signs of turnaround. But I would still be a little skeptical. I think PSU banks probably is where the momentum is right now.
Hari, so let me ask this to you, because I know your past, you've been a very, very renowned trader as well, so to say. And the derivative space, you have been an expert too. What do you do with PSU banks for the short term? Is this correction that has come in post that big move in Wednesday's trade an opportunity to initiate fresh longs from a trading side? And if not that, does this give you an opportunity to an investor to go out and buy a State Bank of India or maybe a Bank of Baroda?
I would agree with the latter part. I'm not sure whether an SBI or a BOB is really a good trading bet, because let's understand, all these stocks are up about 35-40% in a matter of a few days. So I think they may not exactly be a trading bet, and I wouldn't really have the heart to short any of these stocks. As a typical trader, we don't short a stock where the momentum is in favor.
True.
But I still think that if you're looking at an investment perspective of about 6 months to a year, I would believe that any of these large PSU banks could be great buys at these levels. But I think a long trade, strictly no at this point of time.
Okay. I think Mukesh Singh of Neela Financial Services is with us now. Mukesh, looking at your stock calls, you have a buy on Godrej Industries.
Yeah. Morning, Pradeep. Godrej Industries is covered as a buy, and the stock seems to have formed a classical morning star pattern in daily charts, and that has happened at the site of the 200 days exponential moving average. So good support coming in for the prices. And now with the pattern, a buy is recommended around 585. Stop is to kept below 570, and target on the upside is seen at 625.
What's the other idea for the day, Mukesh?
Yeah, the other idea for the day, Niraj, is JBM Auto. This has been in thick of things in the last 1 month or so. But after having hogged the limelight, it had gotten into a kind of a corrective decline. And with yesterday's volume spurt, by that I mean Friday's volume spurt and a bit of a power white candle happening on the charts, it seems that the longer term uptrend is about to reassert itself. Buy in JBM Auto is recommended around 534. Stop is to be kept below 513. And initial target on the upside is seen around 590 to 600.
Okay. Can't not talk about United Spirits. Such a big move in Friday's session. Now, both the technical and the fundamental perspective. Hari, to you first. What do you do here? The commentary on the con call was really, really impressive.
I think yes. The company has been through a lot of, I would say, internal strife. A very dirty management shift. But I think the company seems to be finally getting out of all that. And I would believe that let's give them the benefit of doubt. Probably the company has reached a stage where most of the negatives are kind of factored in. And I think based on whatever we read about the con call, I would believe that it's probably a good time to start looking at this company seriously as an investment.
The whole argument that is there for a lot of people is that India is such a big liquor market and the total market is probably available for what? Less than 70,000 crores or 80,000 crores, with United Spirits the leader at 44,000 crores. So I think the bet has always been that. The only question mark was whether they can get the pricing power or other things back. And this con call, to my mind, I thought suggested ample evidence of that. Their commentary was very bullish. They actually said that not all the price moves are done. They'll probably have to pass on some more price hikes in the quarters ahead.
Mukesh, what would you do technically? The stock corrected 150 rupees or so intraday in last hour of trade on Friday. Do you think there is an opportunity to buy?
It's difficult to comment because these kind of blow-off moves get equally. The corrections also are a bit violent. But if at all, if the stock continues on the corrective decline which was seen in the last hour of the trade and it is available around 2,900. Which is good 125 points down from the current prices, then I will definitely be a buyer in this particular stock for a trade of once again prices testing the recent high of around 3,200. Stop has to be kept below 28.25 kind of thing. So it's a bit volatile. Wait for your dips before initiating fresh longs.
Okay. Hari, do you track Ramakrishna Forging? The company has reported 113% growth in revenue and 25% jump in profits.
See, while I don't track it too closely, I think I have been tracking the stock for some time. And I think what we realize about the stock is that there have been some pickup in demand from the, what I would call the factory capital goods sector. And we could get a better affirmation once we see the IIP numbers this time, whether there's any real turnaround as far as the demand is concerned. But I think what we have heard is that in the last quarter, there has been a good pickup as far as the factory demand for forgings is concerned. So that could probably have driven it. And, I would believe that we are at a stage when this entire capital goods sector is likely to show a turnaround. So I think if you bet on that, at a macro level, yes, Ramakrishna Arcade does look quite good.
Well, interesting set of numbers from RK Forgings for sure. Let's wait and watch if that reacts. In addition to that, this whole announcement about a reiteration of the safety gears by July 19.
Yes.
And that should keep some of the other auto components excited as well, Hari.
That's true.
Anything that stands out for you? I don't know if you've done research out here, frankly.
I'm not talking very specific on the gears front, but then, if you look at the auto ancillaries as a whole, I think we like certain specific names like Motherson Sumi and Bharat Forge at these prices, but we would probably stick to those handful of names.
But those are the larger ones. You're not looking at something
we are not.
which is niche, specialized or otherwise.
No, we are not.
Okay. Well, TS are clearly favoring some of the larger ones. Vishwesh, maybe a 20-second view, but any of the auto component names that stand out as a trade, if at all?
See, I think in that space, if I had to consider something, then probably I would stick to Motherson Sumi. I think that is the one stock in the FNO space, give us a lot of comfort, and that is the only stock which comes to my mind.
Okay. Okay, 30 seconds left to the market open. Stay on, gentlemen, so much more to talk about. But here's the brief trade setup. The SGX Nifty strengthened ever so little from the start of the show. When we started the show, it was up about 0.18%. Now about 0.3%. The rest of the Asian markets are mixed bag, slightly somber, but the SGX Nifty indicating a bit of a start in the green. So that is great news. Let's wait and watch if indeed technology has an interesting day of trade. It did have an interesting day of trade in the US markets. Not that it typically happens that way, but let's wait and watch if that happens or no. But here are the first rates on the index. Well, 0.5%. Maybe 1/3%. The Nifty probably a more realistic one than the Sensex, but let's wait and watch if these rates change. Bring up ICICI Bank, bring up ONGC. I think ICICI Bank would probably have a flattish start. The ADR is indicative of that. 4.5%, I don't know. Let's wait and watch. Let's see ONGC. That's the interesting one. And lo and behold, the numbers were weakish, but the management commentary fairly optimistic. Maybe that's rubbing off, or maybe these are just pre-open rates and these will settle down. Let's wait and watch. I want to mark United Spirits before we move on to some of the other small cap or mid cap results as well. But just United Spirits, by virtue of the big move that it had in Friday's trade, maybe another 2.5%, maybe a day in the green yet again. Let's wait and watch. And then two names before Pradeep takes over. One of them is RK Forgings, one of them is HOEC. I think two mid-cap names which stood out in terms of interesting results. Wow, that's a big move. Let's wait and watch. RK Forgings, maybe not 20%, but certainly indicative. HOEC a more muted one. Let's see if indeed this improves as the day goes by. But RK Forgings, Pradeep.
Actually, numbers are really worth that, but let's see how much gains do we really get. IDFC Bank and Shriram Transport should come on your screen because now it looks like they're formally going to call off the merger. No action on IDFC Bank. Look at Shriram Transport. Well, here again flat, so not much movement. M&M Financials, which is considering fundraising, is another stock that we should keep an eye on. To talk about more results, Tata Metallics is one that came out with still a set of numbers. Again, Tata Metallics is up 3.5%. I mean, flooring numbers were also good, and so were Sundaram Finance. Let's see how these two stocks have reacted. Navin Fluorine is up 4%. Sundaram Finance will come next on your screen. On the negative side, we'll probably have Spark, Sun Pharma Advanced Research, and let's see how that stock is actually reacting down 4%, just 4%, I would say. Not bad. Adani Transmission and Jubilant Life, two more key stocks. And Adani Transmission is flat. Jubilant Life should come next on your screen. This is actually flat. That's good. Not bad.
Yeah, that's not bad. Just one last stock actually. Sundaram Finance is what I think Pradeep was referring to. That's the one that has come out with good numbers. Let's see if Sundaram Finance is reacting. It's not a very liquid stock, so may not have too much of a reaction, but do watch out for that. The currency, meanwhile, 64.90. So, well, a bit of a pulled back. It weakened considerably in Friday's session. In today's trade, marginally higher, 64.89. But Yatin Mota is standing by with the big brokerage calls of the morning. Yatin, over to you. Good morning.
Good morning, Niraj. And, ICICI Bank and Maruti will be in focus after the management conference call as well as the second quarter earnings. We have ICICI Bank, which reported a stable set of, asset quality and stable earnings. The UBS has maintained a buy with a target price increase to a level of 400 versus the previous target price of 380. They have increased the FY19 and FY20 EPS by 4 to 2% respectively. Clearly at this point in time, the divergence figure for the second quarter is not available, and that is the reason why the brokerages have not significantly increased or decreased the target price, and same is the case with the rating. Maruti Suzuki, Macquarie has increased the target price to a level of 10,000 rupees. One of the brokerages which has the highest target price on the stock. Their earlier target price was 8,250. Of course, they believe that the kind of improvement in margins that we are seeing, plus the kind of new launches that Maruti has planned moving forward, would boost the overall earnings. They expect the profit CAGR for the next 3 financial years at a 17% growth rate. Of course, Reliance Power also will be in focus. We have Nomura, which has upgraded the stock to a neutral and put a target price of 42 rupees. They say that the Bangladesh forays would add significantly to FY18 earnings, and they believe that given the fact that there is volatility in the domestic operations, we could see a decline of 22% in terms of earnings moving forward as per their estimates.
That's interesting, actually. Thanks, Yatin, for the details. Nomura upgrading Reliance Power. That's a good news for an ADAG company after a long time.
I haven't heard. I mean, if at all on the Reliance Capital stock, but otherwise Reliance Power, it's been a long time coming, Pradeep, you're right.
Hari, any views?
No, again, I think this stock has been a big disappointment in the last many years. I remember, we have been trying to track the stock for a long time, but I don't think it's moved anywhere. I think the 55-45 range, I think that's where it has been for a long time. I think the whole game in power is changing, because I think increasingly PPAs are getting abdicated. Power is becoming a tough business. So if I was to bet on a power company, I would probably bet on a company that is getting out of power, like Tata Power. Now, Tata Power is actually getting out of power. So I would rather bet on a power company that is getting out of power than rather bet on a company that is staying in power. So for me, my top pick still remains Tata Power. Reliance Power is something I would still stay off.
So Reliance Home is actually the ADAG company we'll be watching out for today, because they'll come out with their first set of numbers after the listing or the delisting. Any views on that one?
See, I think the stock is an attractive price point, because I think post-listing performance has been disappointing. People have not been too happy with the way the company has been broken up out of and the internal sharing. But I think about 15-20% lower than the issue price, the stock looks to me quite attractive. It's just the first quarter. I think we need to see a couple of more quarters. But I would believe that if you're looking at home finance as a business, Reliance Home does offer a good entry point at this point of time.
That's interesting. The other name that we want to talk about is Shriram Transport Finance or Shriram City Union Finance, because now the market is rife with talk that the IDFC Shriram merger talks are off. The deal is off. Look at that move on scuff. Shriram City Union up 11.5% in trade today. Shriram Transport, mind you, has had a bit of an up move in the last 1 month already. That's a bit muted, but Shriram City Union Finance certainly up and about. From the start of when the deal was announced, Hari, it's been embroiled in this whole controversy, or not controversy really, but the talk about how complex a structure it is, whether it will go through or no. And almost everybody believed that if it's not going through, it's positive news. What would your thought for positive news for the Shriram Group stocks? What would your thoughts be?
See, in my view, the big worry that both the sides to the deal had was that it may not pass muster with the RBI because it's almost akin to Mr. Piramal entering banking through the back door. I think that was one of the principal reasons I think the deal is actually running into trouble. I don't think the valuations were negative. If you add up the kind of benefits that Shriram would eventually get from the merger, and I think the Piramal Group was willing to actually reconsider the terms of the merger, so I don't think that was an issue. I think the whole issue is they were worried that there will be too many regulatory hurdles to the whole issue. But I think the problem is something slightly larger. I am a little worried about the way mergers are being called off. We have seen this probably being called off. We've seen the Arcom Aircel deal being called off. I think too many mergers are now being called off. I don't know whether there's not enough due diligence done. I don't know. It's just about the price play. I'm not sure what it is. But I think it's a slightly worrying trend if mergers are announced and then suddenly called off.
That may well be the case, yeah. But okay, it's a bit of a cool off for Shriram City as well, not 11% really. But a bunch of other stocks moving up. Vishwesh, let me try my hand at HOEC. You mentioned you don't track some of the mid-size RK forging kind of stocks, but HOEC, if you have a handle on that one.
See, I think that's been tracking for a while. That stock looks good, but apparently you have to keep in mind that this is definitely not a trading bad. It is likely to, move significantly higher from a current level. I think if I had to put a number, then I think stock looks like a 200 plus. But then you have to keep in mind that this is definitely not a short-term trading call. I think with a stop below 50 odd rupees, it becomes a 1-2 years sort of a pick, and you could expect a target of 150, 200 also. But it is not for a shorter term.
Okay. A pre-open rates about to settle in fact, would have settled. Let's just bring up what the pre-open rates are indicating for our markets. We'll start off about 1/3% higher. ICICI Bank, ONGC, USL amongst 3 large caps. 2 nifty names, 1 large cap name. I just want to mark all 3. ICICI Bank starting off flattish. ONGC about a couple of percentage points higher. It's a stock in a strong uptrend. There is a slightly weak quarter, not disappointing it. And United Spirits should come up on your screen. The big move, another % higher. Okay, maybe ONGC. If you have looked at the charts, would you trade this one? It's starting off a couple of percentage points higher.
ONGC, I think from 170 onwards, it has been a bit of a very smooth uptrend. And if it's starting at around 186, then the market itself is saying that it's very much on the target area of towards 190, 195. So if one is playing for 10 rupees kind of move, one can keep a stop placed around 181.
Okay, that's the word on ONGC. Vishwesh, one quick word on ICICI Bank as well for the trade today.
See, I think in a very shorter term, ICICI Bank among the private sector bank does look good. But at the same time, you have to keep in mind that stock has moved up a lot in a very shorter term. I think 10% move, for that matter, 20% move from the lows of last month. So my sense is that you are right now at the place where if it manages to close above 312, then you're talking about a 360, 370 level, irrespective of what market feels. So probably what I would like to do is I would like to form some sort of a bullish strategy via call option. So what I would do is I would buy a one lot of 300 call option, and I would sell a 320 call option, which is 2. So 1:2 bull call ratio spread. That is what I would like to trade on the ICICI Bank. My sense is that during the month of November, ICICI is definitely going to surprise on the upside. 360 is likely to be the target.
Okay, just a few minutes away from the market open. Let's tell you all that you need to know to stay ahead in trade today. Strong results by Minda India, Tata Metallics, Navin Fluorine, Sundaram Finance and HOEC. All of these stocks look like they are going to react. Ramkrishna Forgings up 15% in the pre-open rate.
On the other hand, weak numbers from ONGC, Jubilant Industries, Spark, INEOS, Tridolution and also Jubilant Life, Bagadia Industries, Adani Transmission, Seshashai Paper were some more weak numbers. Also Aero Granite. So all these stocks are likely to react negatively. They are actually.
Yeah, Bharti Infratel, HDFC, Lupin, Tata Steel and UPL, 5 index companies that will report numbers today.
Well, Bharat Electronics, Central Bank of India, IDFC, Kajaria Ceramics, LIC Housing Finance are some of the mid-caps that will report earnings today.
A bunch of names there. IDFC Bank, Shriram are all set to call off merger talks as both sides have failed to arrive at an acceptable valuation. As reported by a bunch of newspapers, including the Mint and the Economic Times.
And multiple price target hikes in Maruti post strong earnings. Macquarie becomes the first brokerage to raise the target over 10,000.
Wow. Well, Hari, before we thank you, 10,000, is that but a milestone, or do you think it's difficult to put that in perspective?
We have been targeting 10,000 plus for about last 6 months. And See, what has happened in the last probably 2 years is that they've just dominated all the three segments, the entry segment, the mid segment, and even the SUV segment with their S-Cross and other models. So I think it's going to be a very, very hard game for anyone else to replicate. And the way Mahindra or even Tata Motors have lost market share, I would believe that Maruti looks set to probably be the leader for quite some more time. So 10,000, I think it's more of a theoretical issue. I don't think it's a matter of time, probably 3 months, 4 months, hard to say. But I think 10,000 is probably a starting point. It could actually go higher than that. But 10,000 is something we have been talking about for the last 6 months.
Fair call, Hari. Appreciate you taking the time out and joining us. Thanks much for being with us. Well, that's an interesting set of thoughts from TS Hari here, not just on Maruti. I think if you clocked in throughout the discussion, heard a bunch of stocks really. Okay, in moments from now, we'll also get in Rajeev Thakkar of Parag Parikh Financial Advisory Services, AMC, to talk about his thoughts. I really will be keen to talk to him about Amazon as well, even though not listed in India. But having said that, just a couple of minutes left for the markets to kickstart trade. So let's talk about the top stocks that both our technical experts are giving out for us today as stocks to watch out for. Mukesh, to you first, your top trading call for the morning.
I will be looking to buy this Godrej Industries around 585. As I have said earlier, stop is to be kept around 570, and I am expecting a target move around 620.
Anything you have spotted? Vishwesh? Yeah, any trade that you have spotted?
Yeah, Pradeep. I think very short term, like I mentioned. Yeah, so couple of trades from my side. I think Wockhardt Pharma with a stop loss of 630 for the target of 740, and second is Engineers India with a stop of 175 for the target of 200.
If you have to bet on one stock, which one would that be?
I think in a very short term I would like to go ahead with the pharma. I think Sun Pharma may surprise on the upside. The trigger being that Halol plant is likely to get the US FDA clearance. So my sense is that is the one stock which I would like to bet.
Okay, if he's betting on one stock, it is Sun Pharma for the day. So those are the top 2 recommendations from our technical experts. 22 seconds to go before the market kickstarts trade. You'll have a flurry of activity in stocks like Ramkrishna Forgings for sure. Let's wait and watch what happens to some of the consumer names like United Spirits and a few others. So a bunch of things to watch out for in the session today. ICICI Bank and ONGC would be the key nifty names that have shown their hand and will react on market open. But these are the first rates. The Nifty 1/3%, the Sensex about 1/3%, but the Nifty Bank not moving at all. I would presume the culprits could well be some of the PSU banks, but this is yet again flat in trade, in fact marginally off in the red. Let's bring up the heat map and show you what's really happening to the large cap names in the session today. Maybe more green, but remember it's flattening out very, very quickly. The Sensex is now just about 59 points higher, but more green than red on the screen for sure. And I can sense some moves in telcos and some moves in result reactionary stocks as well, the likes of ONGC. So let's pull up those names. ONGC should come up on your screen. ICICI Bank should come up on your screen. Both of these are reacting. ICICI Bank, despite a very decent quarter, I thought, is down about 1.5%. ONGC is up about 1.5%, despite the quarter not being the best. But I think the management commentary on BloombergQuint certainly suggested that the numbers will look, or the quarters ahead could be good. I just want to mark the Bharti twins as well, Bharti Infratel and Bharti Airtel. I think promoter entity mentioning that they want to buy into it, and that's leading to some bit of a surge. Bharti Airtel up 1.5%. Infratel too is taking some fever out of that, up about a couple of percentage points. Remember, it's had a terrible last few days. Now starting to find some green on the screen. What about some specific names at the broader end of the spectrum? Some result reactions and otherwise as well. Firstly, HOEC, the EBITDA has moved up 5x for HOEC. That one is up about a couple of percentage points. I think the standout more, as Pradeep mentioned, was Ramkrishna Forgings, 12.5%, maybe not 20%, but 12.5%. I think anybody would take it with both hands. The stock back to those levels of 750, 780 odd after a brief correction in the last 6 odd months or last 12 odd months. Some strong earnings for Sundaram Finance, which is up 1.5%, so good going there. Tata Metallics is really a good one, 4.5% higher, and Navin Fluorine about a couple of percentage points, so good going for that one too. And I just want to mark one more set of stocks, two stocks actually. One is Sriram City Union Finance. Is the deal off? Newspapers seem to believe that Media seems to believe that. That one is up about 4%. And Sterlite Tech, just very quickly want to mark that before I hand it over to Pradeep. Promoters bought a small quantity of shares on October 26, but that stock marginally higher in trade. Pradeep, what else?
Well, two PSUs, MTNL and HOEC, have moved up today after a while. Minda India, as I mentioned in pre-open session, is up 5%. Ballarpur Industries is an interesting gainer, up 5% in today's trade as well. Power stocks, if you look at GVK Power, continues to move up, has hit another high upper circuit actually here. Also, you have stock like Bhushan Steel doing well in today's trade with good volume. Reliance Naval is up 3.5%. Inox Wind continues to move up. That's yet another interesting gainer. And EIH also sustains the uptrend. Jet Airways has moved up by around 3%. So that's another key gainer. PNB, well, we have been talking about PSU banks. You have PNB, Syndicate, Indian Bank, Allahabad Bank. These are some of the banking names that have moved up. So there is some buying interest once again coming in after some bit of correction that we have witnessed over the last few sessions. Adani Transmission, on the other hand, is down 5%. Sun Pharma Advance is down 4%. That is as per expectation after the numbers. Ingenious India is trading weak, and IDFC Bank and IDFC are also trading weak.
Okay, just a quick check. Mukesh, very quickly, Ramakrishna Forgings, can you trade that one?
I mean, trading at this point of time, after the stock has gone up by 12%, is a bit difficult. The stop itself is coming, at least if you keep morning lows as stop, then also it's quite far. But one thing, Niraj, it seems to be a kind of a stock which is about to complete some larger bullish patterns. And this one seems to be heading towards a 4 figures mark very shortly. And I think an investor over here can expect to see a price around 1200 or even 1450 kind of in the next 6 months.
Vishwesh, would you like to buy any of these PSU banks?
I think, Pradeep, in a shorter term, if I had to consider a PSU bank, then probably I would go ahead and buy Bank of India and probably, Oriental Bank of Commerce, because for the simple reason, from the lower levels, this both banks has a, impulsive structure. I think in a very short term, if there is any correction pullback, I think it is likely to be a very good opportunity to buy. So Bank of India and Oriental Bank of Commerce, these are the two PSU banks I would consider buying at a lower levels.
Interesting. Pradeep pointed those out because I think PSU banks just made a bit of a pullback in the session today. Thanks a lot for that, Vishwesh, as well as Mukesh. Appreciate you taking the time out. But I tell you what, all of these moves get dwarfed in comparison to what happened in Friday's session, Pradeep, at the US markets. Not really to talk about that, but I'll slip in that question to Rajeev Thakkar, Chief Investment Officer and Director at Parekh Financial Advisory Services Mutual Fund, joins us on the show. Do you have Amazon in your portfolio, Rajeev?
No, we don't.
You don't? Are you ruining the fact?
Well, one of our other holdings was Alphabet, so not ruining it too much.
Okay, yeah, but it's a move that is stunning because Microsoft was up, but all the others were up too. We'll talk about that, but it's just great as to what's happening to US technology. Clearly, in stark contrast to what's happened to Indian IT.
That's true.
Okay. Anyways, having said that, what are your thoughts on what's happening within the Indian markets? We sitting pretty almost at new highs. Are these levels where you would deploy fresh money into the Indian stocks if you get the opportunity?
It's tough. So it's tough deploying money. So we have been sitting on a little bit of cash, maybe about 17-18% odd as per last fact sheet. This includes arbitrage positions as well. So we are at multiples for the large cap of about 25-26 on trailing basis. Small and mid cap are north of 30. So these are typically levels where things don't sustain too much. Momentum can take it up, but valuation doesn't leave much scope for expansion. So the only thing left is a very strong earnings growth coming in. Earnings growth has been there in some stocks, some sectors, but it's been a mixed bag. It's not across the board. Some would argue that we are maybe bottoming out on the economy front. Decisive measures have been taken for bank recap, and we should be crossing the NPA peak sometime soon. And again, credit offtake should happen. But I would rather wait for things to happen rather than pay up.
Why do you think it will take some time?
It could take time.
What, couple of quarters?
So what has been addressed is the PSU bank balance sheets as and when this happens. But the borrowers' balance sheets are still stressed. So who are the people who actually will borrow and kickstart the capex cycle? So that question is not answered yet.
So you know how PSU banks or banking in general is valued. You look at the adjusted book value. Now with so much of capital coming in, definitely that would boost the net worth, and also they'll be in a position to write off, take some tough decisions, which means the NPA number will also probably decline. So don't you think these PSU banks will be re-rated here on? What kind of upside is possible in your view?
Sure. So the re-rating has been pretty strong last week. People are factoring in the capital infusion. Now, while net worth will go up, the base, the denominator in terms of number of equity shares will also go up. And the book value part of it will go away in terms of write-offs happening, or banks taking the tough decision to maybe sell off assets or take haircuts and move on in life in that sense. So it addresses the past holes or past problems that these banks were facing, and that's a really good thing. So not to undermine the really positive step, but for things to happen, even for these banks to grow further, there have to be reforms at the bank level. So in terms of customer orientation, or how do they address the market share losses that they've been seeing year on year. So those things have not been addressed yet. So maybe we'll see that coming down the line, but as of now it only addresses the past problems.
So you won't buy. Do you want to sell if at all you were
no,
holding?
We don't own public sector banks. So my statements may sound like something like sour grapes. We don't own them. So we don't mind missing on the maybe 20, 25% or 50% rallies from the lows that some of these banks have seen. But if you look at these banks over a 5-year, 10-year kind of perspective, they haven't been great wealth creators. So we would rather stick to proven banks and stay invested there rather than chase momentum or play the hope trade, as it were.
Could something make you change your views? I don't know what your views are, of course, in the first place, on aviation. Because this Diwali season, I think one conversation that me and Pradeep have with a bunch of people is that everybody's saying that what Buffett used to say about aviation being gruesome companies, I think that is now starting to change a bit for Indian aviation as well. There are moats in place. The earnings are looking a lot more stable. And you have to admit that the numbers for growth look promising enough from an Indian passenger perspective. What are your thoughts?
Sure. So, number one, Buffett himself has changed his mind. He has bought US Airlines. So, his earlier statement may not be that valid anymore. I think, given that overall people are expecting oil not to go significantly higher, given the move towards electrification and people wanting to monetize their oil reserves, it may not go back to $100, $150 as it seems. So one side of the thing is taken care of. Volume growth is there, demand is there. The constraints that I see are that airport capacity is not there, especially in the larger cities. So that could be a constraint on the volume growth. However, that may not be such a bad thing, given that people who have slots currently may be able to exercise pricing power. So we may see volume growth not being as much as people expect, but profitability to sustain. So we are watching the space. As of now, we don't own anything, but it's an interesting space to track.
Here. Rajeev Thakkar is saying it's an interesting place to look at. That's interesting. One of the true blue, really, if I can use that term, Rajeev, not in a bad way, but you know, old school thought of investing. And Rajeev believes that aviation could be a meritorious look. One last question from mine. Pradeep probably has a couple more. But if the promoter entity is wanting to buy into Bharti Airtel, does that speak about a strength in telecom, or could this be not necessarily linked to what would happen to telcos over the next couple of years?
So near term, I think the consolidation is clearly underway. So you have seen Tata giving up its cellular business to Bharti. You have seen Arcom shutting down its 2G, or reports being there, they'll shut down the 2G business in terms of mobile services. So clearly that consolidation is happening. You have seen Jio increase its prices a bit. So we are going towards a scenario of 3 large players, Bharti, Vodafone Idea and Jio. So given that, maybe there could be a bounce up But our issue with the whole sector is that it's too capital intensive, and you periodically see these shifts in technology where obsolescence rate is pretty high. So whatever arguments one makes today in favor of the sector, the same could have been made when 3G licenses were given out, and we know it hasn't played out that well. So who knows, maybe 2-3 years down the line we could be talking about 5G or some other thing coming in. So we are not great fans of the sector per se.
Okay. I would like to understand your call that you are sitting on 17-18% cash. It's a tough call to make. What's the thought behind it? What kind of correction do you really foresee? And at what level would you like to come out and buy? And what will you really buy?
Sure. So we get this asked this question a lot, that are you very bearish on the markets? Or so we say we are 83% bullish. It's not that we are sitting wholly in cash. So it's not about market timing or about looking at a particular index level. Essentially, we are looking at at companies on a bottom-up basis. So even in a scenario where markets are touching all-time highs, if 1 or 2 stocks correct, or we see earnings growth visibility and we find opportunities at attractive value, we could go out and deploy 5-10% pretty soon. So it's not something to do with overall market levels or having a target at this index level we'll enter. It could get deployed when we speak next.
So you don't want to buy PSU banks. What else is available, at reasonable prices, probably IT and pharma, or anything else that you really have an eye on?
So IT and pharma clearly have not participated in the up move, and if at all they are lower than the highs that we have seen in the past. So that could be a hunting ground. One could look at opportunities over there, but one has to be selective. There is a reason why stocks are down. They are undergoing through their own challenges. So one can't buy across the board. One will have to be selective in that space.
Okay, interesting. You've pretty much answered most things that I wanted to, but Pradeep pointed out today morning fairly interesting trends that we're seeing in the commodity space. Anything out that in that basket, be it crude linked, be it global metals linked, that you would be keen to look at afresh?
So we are seeing bounce from the lows, but I don't think that the overcapacity problems have gone away. It's not that crude oil supplies are not there. So if price rise continues, you will see enough supply coming in. So we don't own any significant commodity companies in the portfolio, and we are not looking right now to add anything in that
Would you look
space.
to add Amazon?
Amazon is a difficult company to value. So it's not that it's doing badly, but whatever profits they earn from their core businesses, they go out and spend in new businesses. So on a net basis, you don't see any profitability. Yeah. So how do you value it is a question I have been grappling with. I don't have an answer as of now. So the other companies, let's say Alphabet, Google, or Apple, these are more conventional in that sense. One can value them on traditional metrics. Amazon is too difficult to value.
So actually, Jeff Bezos and Radhakishan Damani have made it to the rich list, with their retail companies, but you're not bullish on this sector from the viewpoint of a retail investor or a fund manager.
Sure. So both great companies. It's just that I don't know how to value them or whether the current valuations are justified. So at a particular price point, maybe they would make interesting purchases. Not right now.
Fair call. Okay, Rajeev, so good having you. Thanks much for taking the time out and joining us and giving us the perspective.
Pleasure being here.
This is one fund wherein if you invest into, you get access to investments both in the US markets or global markets actually by and large, and the Indian markets as well. So that's a bit of an interesting twist that PPFAS AMC provides. So we slip into a quick break, but up next, with the markets actually perched really well, 38 points in the green, so not bad going. But up next, we talk about the possible coal shortage in the country with Gopal Singh of Coal India, second quarter earnings with Ashish Damani of Bharat Financial Inclusion and P Elango of HOEC, and the government's push for stricter safety equipment in cards with NK Minda of Minda Industries. Markets seem to be doing okay. Welcome back to Indian Open right here on BloombergQuint. The markets seem to be doing okay. Inox Wind amongst the best performers at the broader end of the spectrum, up about 5.5. Okay, just dipped a bit. GVK Power is locked on an upper circuit. Jet Airways is the best mover, 7.5% higher. And Ramakrishna Forgings has come off completely from being up 12.5% on open to just about 7% now. So a bit of a pullback for RK Forgings. However, we're talking about thermal coal production and the shortage of coal in the country. A bunch of reports over the last many months, more so in the last couple of weeks, about how certain power plants are running short of coal. They may have to shut operations in the next couple of days. Has this also prompted the power producers to write to Coal India requesting a ramp up in supply? So what's caused this shortfall, especially since the world's largest coal miner is said to have enough stock at its pit head and is talking about record numbers of production? Joining us to talk about that is the Chairman and Managing Director of Coal India, Gopal Singh. Mr. Singh, thanks so much for joining in. The shortage of coal has hit most states badly, Karnataka being the worst hit, if the newspaper reports are to be believed. Is it because of rake shortages or are other factors involved as well?
Actually, what you say, that is the fact, because still we have more than 29 million ton of coal in our mines, and even power plants have their stock of more than 5-6 days. So if you take the coal lying at mine pit heads and power plant pit heads, it's sufficient for more than 20-25 days as such at the level of present consumption by the power plants. So it's not the question of coal availability in our country, it's the question of moving the coal available at mine heads to power plant heads.
So, okay, so do you think that power generated could stop in the next few days unless some measures are urgently taken? And what could be those measures, Mr. Singh?
See, there are the 3-4 modes by which coal moves from the mines to power plants. It is through railways, then it is through MGR, then through belt conveyors, and then by roads. And next mode is, RCR we call it. From mine heads, power plants, they take the coal from mine heads, they move to the nearby sidings, goods shed provided by railways, and they take the coal to their power plants. So all these modes taken together, right now we are dispatching about 77,000 tons of coal to power plants every day from Coal India. Last time, we had a meeting with the concerned officials of the Power Ministry, wherein it was more or less agreed that if Coal India supplies 12,50,000 tons of coal to power plants, that will be sufficient. And since then, we have supplied much more than 12,50,000 tons of coal per day. It's about 12,70,000 tons of coal per day, and that is going to increase. It is increasing every day. And even at this point of time, Coal India is ready to provide them, whatever the tonnage they require. As
okay,
I pointed out in the very beginning, that the question is how to move this coal from the
So that's my question, Mr. Singh. Do you think the issue of diversion or rake availability is the bigger issue, or is the bigger issue something else?
See, the biggest quality of the present central government is that it doesn't work in silos. All the ministries, all the departments, we work in unison. We work as a team. There is a team spirit. So this problem, in fact, cropped in because of the failure of your hydro, nuclear and wind power. So there was a sudden surge in the demand. Therefore, this crisis sort of things, appeared in the media and everywhere. And some of the power plants, this is a fact, that they face the crisis. But as I told you, that there is a team working for this. You remember, our Honorable Coal and Rail Minister, he met Honorable Minister Power. They had the long meeting. Then every week, Secretary Coal, Member Traffic, and senior officials from the Ministry of Power, every week we are meeting. And every week we review that what has gone wrong, what are the areas where improvement is required. And that's the reason that over past 1 week, you will see there has been a lot of improvement. So it's just the question of days. It's not going to continue. There's no question of continuing it.
which is good to know. September and October, Mr. Singh, have been good in productivity for Coal India. I have two questions. One, is that enough to meet the immediate coal demand? And whether the dispatch mechanism is working or things need to improve out there?
There is one very good news that you discussed about, that there is a coal crisis in the Asian Pacific. That's really very encouraging news for we coal Indians. Because see, I mean, once there is a demand, there is every opportunity for us to increase the coal production. So in days to come, it will be, demand will be the main driving force for us to increase our production. So that's a very good news, one. Two, let me tell you that railways, they have increased the rake supply. I mean, if you take it, it is probably the highest. And the rakes are not an issue at the moment. Already there has been a substantial growth. But as I told you in the very beginning, that there are 3-4 modes by which coal moves from the mine heads to power plants. It's rail, then your MGR. MGR, again, there has been a substantial growth. Then third is belt conveyors, of course quantity is limited. Fourth is road. Road also, I mean, there has been a growth, but there is much scope to improve by road mode still. And next one is RCR mode, we call it, wherein power plants, they lift the coal from mine heads, they take it to the nearest goods shed provided by railways, and then even that coal moves to power plants by railways only. So railways, they have been doing the best, and all this taken together, it will solve the problem. This power crisis, I mean coal crisis in power plants, it's not going to continue to be headlines in the newspapers after a few weeks.
Touch wood, we all hope for that, Mr. Singh. Thanks so much for taking the time out and joining us and giving us that perspective. By the way, the market is now trading in the day's high up 0.5%. The Sensex up 141 points. The Nifty Bank is the key one. I think read predominantly by PSU Bank. State Bank of India is up a couple of percentage points. But the Nifty Bank is moving up. And when the Nifty Bank moves up, you have some strength on the Nifty as well. So good going really. We're trading at the high point of the day. Are we trading at the high point of the day for Bharat Financial Inclusion though? Because that stock reported a stable set of numbers during the second quarter. The stock is down at the lowest point of the day. But let's talk about all that happened in the quarter gone by with Ashish Damani. He's the CFO at the company who joins us on the show. Saloni from the research team joins in to take the discussion forward. Saloni.
So good morning, sir. What is the target loan book growth and the mix between individual segment for Bharat Financial in this quarter?
So we've been, guiding that we would like to have growth between 40 and 50% for next 2 to 3 years, and in that line we are looking at something like 13,500 crores loan book ending, March FY18. In terms of segmentation, presently we've been focusing on income generating loans, and that would be largely what we will have at the year end. We are doing some pilots on two-wheeler loan side as well as home improvement side, but those would really be small in the current financial year.
Also, sir, the credit cost has normalized. What is the reason behind high provisions in this quarter? Any spots of worry there?
What happens is our provisioning policy is such that we provide 50% for bucket which is between 8 weeks to 25 weeks. Some of the loans, if you look at last quarter, we had almost like 69 crores which was there, which was not provided for in this bucket, and some of it has moved into the next bucket, which is more than 25 weeks, where we provide 100%. That's the reason, but largely if you look at the overall net NPA number now, it's at 0.3%, about 22 crores. So pretty much everything has been provided for in terms of whatever impact has to come.
Can you share some numbers on asset quality in key states like UP, Maharashtra and Karnataka as well?
UP and Karnataka have been improving and shown substantial improvement. We are very confident that more improvement will be seen in these geographies. Maharashtra has been a bit of a challenge because the improvement has been relatively slower in the pockets of Maharashtra. However, the rest of the districts in Maharashtra have been performing fine.
And what sort of improvement are you seeing in collection efficiency?
See, this has to be looked at with the disbursement that we have done from 1st January onwards. And if we look at that, our repayment collection efficiency rate has gone up to 99.8%. This forms 82% of our book as of September end, and this is likely to go to 95 to between 95 and 100% in the next quarter.
And so my last question is, what changes for Bharat Financial post merger with IndianOpen, and any timeline on merger that you can share with us?
Yes, we have actually articulated the process and likely timelines. It may take anywhere between 6 to 9 months. In terms of the changes operationally, we continue to focus on this microfinance segment and the profile of customers. More products can be offered to the same customer segment, especially on the liability side post the merger. And certainly we on the balance sheet will have some advantage on the cost of fund side.
All right, sir. Thank you so much for talking to us. It was a pleasure speaking to you. So that was the management of Bharat Financial. Back to you guys in the studio.
Thanks a lot for that, Saloni. And from one management to another, this one has done rather well for itself in the quarter. It's doing reasonably well on the bourses as well. The market is giving support too in today's session, but HOEC, blockbuster quarter, quite frankly. Had it not been for depreciation, I think the bottom line numbers would have looked even better. But not a bad quarter. Top line's grown well. EBITDA showing really good and strong numbers too. Mr. P Elango of HOEC, Managing Director of HOEC, joins us right now on the show to talk about the numbers and the outlook ahead. Good having you, Mr. Elango. Thanks so much for joining in. Simple question: what led to this performance? Because it's taken the best of most of the analysts by surprise.
Okay. Thank you. I think the first time our quarterly results reflect the 1 month of production from Assam. As you know that we commenced the commercial gas sales from Assam on 26th of August. So in this quarter result, you are seeing the numbers of September. So that kind of sets a tone for continuing increase from operating revenue quarter after quarter from now onwards. We are looking at ramping up the Assam production almost 3 times over the next 6 months period. So effective 1st April, the total volume of gas sales from Assam would be about 1 million standard cubic meters and about 1,000 barrels of condensate. So we are right now executing the phase 2 of the facilities, and they are on track to commence. So this quarter basically results just 1 month of the Assam production.
Wow. So is 1 month of Assam production, which is also not peak production, and your revenues have moved up 126% higher on a quarter-on-quarter basis. What is this? What does this portray in terms of basic numbers on the revenue front for the rest of the year? I mean, what would you do in quarter 3 and quarter 4 with all 3 months of production available? And I would presume from your answer, a ramped up production available.
Yeah. Essentially for the next 2 quarters, the production from Assam would be around the same numbers. We are expecting to commission the full facilities in the last quarter of this year. So you would see from the first quarter of next year the full volume numbers as such. So, but overall, compared to last year, what you would see is our revenue from operations would start climbing up. Right now, our run rate for HOEC is about 4 crore per month is what you would see going forward.
No, and Mr. Elango, please correct me if I'm wrong, but even though the ramped up production would only be next financial year, the second half of this financial year will see all 3 months getting the benefit from the Assam production. So there is a natural tailwind to your revenues in this year as well, and next year you have a ramped up production.
Yes.
So I would presume for the next 4 quarters,
Absolutely.
you would have a revenue, or next 6 quarters, you will have a revenue run rate which is much, much higher than the current quarter.
Absolutely, yes.
Okay. Now, the other bit is the uptick in EBITDA. Is it a natural course of what's happened to revenues, or are there other factors to it? Because the margins have really shown a sharp uptick. Are these margins sustainable?
Yes, it is sustainable. So what we have done in the main field in Assam, we have gone for a fixed operating cost model. What do I mean by that is we've gone for a modernized gas processing plant that would be commissioned from 1st April, which would see where our operating costs are fixed. Roughly, our operating costs would be less than 60 cents per unit of gas, against the price that we would realize about $3 per unit of gas. So you could see, the operating margins are in the order of 75% or so. So cost base would remain low, and what you're seeing is because the very low cost operations we have.
Wow. And when does this heightened depreciation play out? Because the only thing which curtailed your bottom line performance optically was this heightened depreciation number. Does this end in a hurry, or will these depreciation numbers stay high for the foreseeable future?
No, the depreciation would, we would be capitalizing some of our facilities that we have created in Assam over the next 2 quarters by end of the year, essentially. So you would see that reflecting in depreciation. But otherwise, on a cash basis, we're really looking at some very healthy numbers going forward.
Certainly see that. One question is on the unified tariff, which has been announced by PNGRB. My analyst Somit wanted to ask this to you. And how will that help the company, and can we expect further cost reductions as a result of this?
Not really, because what we have done in our facilities, we have built our own pipeline to customers. The gas that's being produced in Assam is being sold to Oil India, and we have laid a pipeline up to the Oil India facilities. So essentially, we don't get any impact due to the change in the tariff structure as such. What we are benefit from is really you're seeing a hardening of oil prices. For example, last quarter our average realized price was about $49. This quarter is about $52, and over a period of time, this increased oil price would reflect in an increased gas price in the domestic market as well. While our cost base will continue to remain stable. Therefore, any increase in gas and oil price would really go to our bottom line straight.
Okay, which is great. So, Mr. Elango, my final question, and just so much about the numbers really this quarter. Haven't had a chance to do more. Would you need to kind of do any fundraising? That is one. But two, more importantly, just as a vision, not really the next 1 or 2 quarters, but say post the next 18 months, when you take in all the benefits out of the plans that you have had and the vision that you have established, would it be fair to assume that your quarterly revenues could inch up to northwards of, I'm just throwing out a number there, higher teens, or maybe northwards of 20 crores, 25 crores? Could you hit those numbers very soon?
That's what our vision is essentially now. First thing is to kind of complete this ramp up in Assam production. When we do that, at the beginning of next year, we would see a daily revenue of about 40 lakhs per day net to HOEC, which would translate to roughly about 120 crores of top line for HOEC as a whole, including our current production facilities. So as I said, our operating costs are fairly low. Therefore, they are roughly about 10 crore in Assam, another 10 crore if you add in the other facilities. So we are looking at a number of about 100 crore for the next financial year as a whole. Our next target is really focusing on reviving the production from PY1 offshore field, where we have come up with a 3-well intervention campaign. So we are planning to invest about 100 crore in that oil field, which is oil and gas field, which is fully owned by HOEC. So we are looking at executing this campaign. I mean, it will commence in first quarter of next financial year. So in the first half of next financial year, we should be completing this program. That should result in increasing the PY1 production by about 3 times. Right now we are producing about 3 million cubic feet per day. That would go about 10 million standard cubic feet per day. So that's 100% owned by HOEC. With that, we are looking at another roughly 100 crore to add in the subsequent financial year. That is about 1920. In 2021, our vision is to start the production from the discovered small field, which is B18 Mumbai High. That we have just submitting the field development plan. So overall, the approach the company will have is to look at one project at a time, execute it within on a low cost and fast track basis, and then add to the cash flow and earnings.
That's fabulous vision explained by the management of HOEC. For all those who missed this interaction, have just tuned in right now, you will find their entire interaction very, very shortly on BloombergQuint.com. So you can catch this whole interaction on our website as well. But Mr. Elango, we wish you all the best for this and more, not just for the next couple of quarters, but for the next few years. It'll be a pleasure talking to you again almost every single quarter. Thanks for taking the time out and speaking with us today.
Thank you so much. Thank you.
That's P Elango of HOEC. Okay, we're running slightly short of time, but let's get in a quick thought from Minda Industries, because come July 2019, rear parking sensors, speed alarms, airbags are not going to be add-ons or special gizmos fitted on premium cars. The Union Transport Ministry is said to have approved the timeline according to newspaper report by the Times of India. And while one will have to see if the car makers pass on the higher costs or no, auto ancillary makers are clearly going to be a happy lot. Joining us to talk on the phone line is Mr. NK Minda, the Chairman and Managing Director of Minda Industries. Mr. Minda, thanks so much for joining in.
Good morning. Good morning. Thank you very much.
Have you learned about this being finally approved by the Transport Ministry as well?
Yeah, it is in the notification is yet to arrive, but the discussions are on, and I think the government is very proactive, and then, they are in a coordination with the auto component sector and the vehicle manufacturer sector, which is called SIAM and ECMA. So we have been discussing this in the, past for the last 1 year, and making regulations of all these, the norms, regulations, the kind of product which need to be introduced in, and this is the notification is yet to arrive, but yes, the government, I think somebody has given this from the government only.
What opportunities, Mr. Minda, come in for a company like yours as a result of this?
So fortunately, we are in all the segments, we are already producing airbag with Toyota Bose, as you know very well, and we are already in seat belt and seat belt reminders, a lot of sensors, lot of alerts. We are in the horns, acoustic areas, so this is related to our line. The beepers, the position will increase. The reverse parking, we are already supplying to Maruti in a small way, where the exported car as of now. And the manual overriding for central locking, we are already in the power window switches and power window systems, so that also will support us. So we are already in all the 5 lines, which fortunately.
Okay, so what's the scope, sir? I mean, I know it's difficult to put numbers. I'm not asking you to put numbers, but just trying to understand from you. If indeed this becomes a reality, July 2019, what's the blue sky scenario for auto component manufacturers and for you in particular? What's the scope of increase that could come about?
See, I would not be in a position to give you the numbers, because the prices, as in the near future is going to come down because of the volume. That's because I can't calculate I can calculate at the present prices of each product line. But in the near future, prices of each product is going to come down because of volume. That's A. And the second question of yours, whether it will come in realistic in 1st July, of course, in fact, it has been extended. Original, it was to come in the March, this April 18, and because of some of the component manufacturers were not ready, and because the technology was not available, and now all the product line have players, around. So therefore, this has been extended, and now it is formed. So over a period, I think per car, I don't know, it will be increasing around 3,000 to 4,000 rupees. I would say 4,000 to 5,000 rupees per kit, on all the 5 items.
Wow. Okay.
Which will reduce to over 3,000 over a period of time.
Okay. My last question, sir, I don't know if you can mention this or no. This is completely off context. I know I'm throwing this out of the dark at you. But do you supply to any electric vehicle manufacturers, globally or in India?
We do supply to Mahindra. Mahindra is the only auto vehicle.
On the global front, sir?
In the global front, we supply to Tesla to some extent.
Okay.
But it's not big. But our parts are not going to change much. There are slight change in the EV cycle because we are already in electronic and electrical, so our parts are mainly. And there are some parts like alloy wheel, etc. They are not going to change even with the EV also.
Okay, Mr. Minda, we wish you all the best. Thanks so much for taking the time out and explaining to us what this would really mean. By the way, the index is trading at the day's highs. Oil and gas. So BPCL and ONGC are up and about. SBI is up 3%. I'm guessing PSU banks are doing it. And the Macquarie note on Maruti or the result reactions or both. Maruti is up about a couple of percentage points. Eicher Motors is up in the green. Reliance Industries is participating, up about 1.25%. So a bunch of stocks in the green, not enough red on the screen, which is leading this smart uptick. We're trading at the day's highs for the key indices. Good time to wrap up this show and hand it over to the FNO show. They'll take forward all the action on the trading front. It promises to be a busy day of trade. Stay tuned to BloombergQuint.